Now, before we get into the Asian side of things that are happening in the market, we just want to provide an update on Israel, Gaza. So one of the things that we've been talking about with Israel and the Gaza situation, so there is a thing called the Gaza Metro. And for those that don't know what that is, that was a wide range of tunnels that were dug and utilized by Hamas, PIJ, in the Gaza region, which was one of the key targets of Israeli bombings. And now when you look at the sorties that have been run, they called it Phase D. So they're essentially in the last phase of destroying this vast network of tunnels, whether it be the tunnels themselves, the entrances, or the known exits, which is some of them are in some sensitive locations, which is why some of the precise missiles are necessary. And one of the reasons why I thought we were going to see more ground combat was to minimize some of the extenuating circumstances in terms of the locations, because there is a high chance of collateral damage. These are the things that we're seeing. But now, since then, there has been a ceasefire that is said to have been agreed upon that starts on Friday. This may allow for another round of rockets from Gaza into Israel, targeting Tel Aviv. We did get more rockets launched from Lebanon that were actually in a known Houthi-controlled location. So this was another pressure point when you look at Lebanon and where Lebanon sits. Now, it was only a few rockets. I think it was only 6 in general. So we're not looking, it wasn't a huge level of them. But again, these are things that are need to be considered when we're looking at what has been moved. So what has been happened so far? So the Sadiqin area in southern Lebanon, from which the rockets were fired, is Houthis, Hezbollah stronghold, and typically this is an avoided area. So right now, the Gaza ceasefire is to begin on Friday afternoon. Israeli army has said that 4,000 rockets have been fired from Gaza at Israel over the last 10 days, which is more than the total amount of rockets fired during the entire 7-week 2014 war. Just to kind of put into context where things sit right now in terms of what that flow is. So Israel's also said if there's another barrage, there might be another response. But Friday is the target that we're looking to get towards in terms of seeing some of this, a ceasefire, hopefully hold over the coming period to get some sort of normalcy back into the region. Now, pivoting over into supply chains, the semiconductor manufacturing capacity by country. This is just, not so much an updated chart, but just putting it into context when you look at South Korea, because when you think about South Korea and specifically Taiwan and Japan seeing another COVID increase or COVID remaining restrictions in place with Taiwan increasing, it becomes more problematic. Now, one of the big components that I don't know if you're new with us, we've talked about it before, but we'll cover it again. Taiwan has been experiencing a very severe drought, which is why there's actually been water restrictions in terms of consumption. And now the issue has gotten so bad that there has been rolling brownouts as the hydro dams do not have enough water to maintain electrical throughput. This is, again, what do you need to make chips? You need electricity. What do you need to make chips? You need water. So a lot of these things are hindering some of this normalcy. And now taking that to the Chinese level, so multinational tech firms are now facing additional pressures within China with addressing multiple governments' concerns about security risks, navigating multiple governments seeking greater control of corporate behavior abroad for political reasons, managing public and employee perception that companies are not living up to their stated values across different markets. Geopolitical tensions are elevating these challenges to a new level. Just yesterday, Trivium flagged how China will increasingly be seeking to police corporate behavior outside its borders. So when you look at supply chain issues from semiconductors, and now this pivot away from China, trying to diversify supply chains, will increase cost. And if increased costs go up, again, kind of pushing through and creating additional pressure on pricing. And then that's why when we turn to the chip making race, so South Korea reigns as the memory king, but remains well behind in logic chips. So this is where logic chips become a bigger factor when we're looking at Taiwan. And that's why when you think about Taiwan and the chip shortage, the issues on not only just power but water become more problematic and create a longevity in these disruptions that again are going to hinder some of the normalcy or some of the return to normalcy for that supply chain, which is increasing exponentially when you think about lead times. So the gap between ordering a chip and getting it is continuing to grow. So it went from about 13 weeks to now 17. So we went from ordering it today and getting it in 13 weeks versus ordering it today and getting it in 17 weeks. This is that continuation of, I struggle to see how we're going to get some sort of normalcy by the end of the year as these shortages and as these lead times continue to increase. Now, we've talked about China, India. We've talked about China, Taiwan. This is just going to be a quick update on some of the invasion side because the U.S. runs war games, just as everyone does, in terms of what does a Chinese invasion look like? How do you protect Taiwan? How would Taiwan protect itself? So right now, when we look at what has happened in general, let's talk about India first. So the Indian government is not satisfied with the response and explanation given by Chinese companies operating in India. Remember, they banned 59 apps in India just because after the Ladakh incident that killed 20 Indian soldiers. So what does this mean? This means that they gave it was a temporary ban. India gave the 59 apps reason why, essentially what is the reason why you should be operating this country, and how are you protecting data, Indian interests? They were not happy with any of the explanations, and now they're permanently banned. So they went from temporary ban to a permanent ban. Now, when you look at what's happened in Taiwan, this is just giving you the backdrop of how that would look in terms of just protection of, where are Taiwanese air bases, where is our military bases, how are things fortified. So the southern part of the island, especially when you look at the southeast, there is a lot of mountains where the mountains, essentially make this a very hard place to penetrate. So you would be coming into the beaches that would provide an area that you could create a beachhead that would then sustain the supply chain overall. And you could see the kind of the known spots within China that we have identified as points of potential launch sites. And the reason why I'm talking about this now is not only because this was a very good chart that was just recently came out in an article, but it's also because China's military opposed the U.S. Another U.S. destroyer going through the Taiwanese Strait. And again, we're continuing to do Freedom of Navigation Acts. They continue to become a bigger problem. And this is why we're always looking at the amphibious staging areas and amphibious buildup zones, because these are the spots that are always being watched for a potential strike against Taiwan. Because again, this is, we wrote an article about how the microchip could cause World War III. We continue to see shortages. This is a flashpoint that we think is a very possible one. Again, what is possible? Everything. It's you always hope it's low percentages, but again, these are those flashpoints that we always look at and speak to in terms of potential risk. So then when we think about risk in general, you have to, what is happening in the world? What does manufacturing PMI look like? How are things going? And when you look at the emerging market, growth is still lagging the developed world. So when you think about activity, economic growth, economic prowess, This is that disconnect, which is why when we look at global growth and that pressure, that the inflation on food, the cost of living is going to continue to worsen at the emerging market side because they're just not getting back to normal. And and then the other issue is developed markets will start to roll over, or at least start to calm down. And again, the developed markets are kind of leading the way a bit, and it's really on the back of stimulus, not real sustainable growth, if you will. And the emerging markets just don't have that capacity. So again, these are the limitations. And emerging markets are also slow to get vaccines, which is going to slow down which is going to hinder the means to cap COVID spreads outside of just restrictions on movement, which again we know causes those damages to the economic growth. And then you have to look at containerized freight index. So Shanghai export rates continue higher, and again these are the things that we're importing. We are importing this price increase. These are things that we have to pay for to get them into our market, which is going to come down to the consumer paying for those increases. And now when you look at Chinese new loan growth, so cumulatively, they're higher, even though they shouldn't be when you think of the cumulative side. But on an aggregate level, because cumulative is things that you're rolling as well, on an aggregate level, you're seeing some of those declines. Again, that tightening on the supply, on the monetary side. So to take that to the next level, credit impulses. So when you look at credit impulses, you're now negative 0.49%. So you're seeing this walk back. And if you think about every peak that we've seen in terms of some of the activity, now remember 2016, we had a lot of stimulus coming from China that continued through 17, and then they really took it back starting in 18. And this is where, again, how much of that push in commodity prices was driven by this surge in credit impulses. And now it's starting to come out of the market. And that's why when we look at credit impulses 12-month change, again, seeing some of this slowdown. Now let's look at it on a shorter basis. So let's look at where things were. Again, 2017, 2016 into 2017, a lot of that activity. You look at 08, 09, and this is when we start looking at the commentary about super cycles and commodities in general. 09, you had a huge surge of Chinese impulses, stimulus. Now we've already rolled over. So how much additional growth can really come into the market when we start looking at some of this capacity and some of this growth, which is why, again, we think that some of these commodities have peaked a bit. Not to say that they're going to have a massive drop, but again, when you look at Chinese commodity trading, it started to come down. You started to see some prices normalize, or normalize relatively speaking, and your prices come down, which again is going to put a little bit of a cap on that inflation conversation, but it's not like we're getting a huge reduction in general. So then when we turn around and we look at loans for real estate developers, the loans have continued to decline, which again speaks to that reduction on infrastructure, that reduction on real estate, because remember, they want to go after real estate developers to try to take away some of the gouging that they've seen, some of the nefarious directions, some of the shadow banking. So we've seen some of those decline overall. Now, mortgage loans to individuals remains the same, but loans to real estate developers have continued to fall and are putting a bit more pressure on the housing side, but they're trying to shift that from urban to rural to try to drive some of that outside of the city growth. Now, when we look at commodity prices in general, and it's important to look at PPI. So when we look at PPI at 6.8, crude oil prices remain elevated. Now, even with them coming down, they're still elevated in general. You have copper price, which has started to flatline. It's come down, but again, it's not back to where it was at the end of 2018. And then iron ore prices have completely roofed. That's a mixture of what they've done for steel, but at the same time from a supply chain situation. So you're starting to see some of that rollover in commodity pricing, but PPI is still elevated. It's still sitting at those levels, and look at PPI in general. PPI can outpace some of these underlying prices. And I think that's the one that we have to be cautious of, because you're already starting to see tariffs adjust. China has renewed some of the waivers to the U.S. in terms of the trade war. So there's some softness or some ability to move within that. But again, prices are still going to remain elevated because there's a limitation to the amount of subsidies they can pass through. And especially now with commodity prices where there are and subsidies already low, it's going to be difficult to adjust them any further. And now keeping that in mind, when we think about, well, what comes next? Now, when we think to the next chart and you just look at retail sales. So retail sales cumulative year over year, 29.6. Retail sales value, 17.7. And then China value added of industry is 9.8. So you can see everything is continuing to slow, but we have to put that into context. So when you think about that in context, so retail sales jumped 17.7% year over year, down from 34.2%, not surprising. Fixed asset investment increased 9.9%, down from 18.3%. Value added output at industrial firms rose 9.8% versus 14.1% last month. Given the distortions from last year's low base, a 2-year average of growth is, I think, which is what we've been talking about constantly. Now, so coming from Trivium, when we look at retail sales, average 5.1%. Growth over April 2020, 2021, down from the average year-over-year growth of 9.2% for the March period over the past 2 years. Fixed investment averaged 5.4% compared with 4.4%, and value added was at 6.9% versus 6.5%. So the economic growth is still that kind of unbalanced level because they want fixed asset investment to come down and it's still elevated. They want retail sales to go up, they're still down, and then the value-added industrial is essentially flat. So there's a lot of this weird pressure in terms of trying to get some of this growth, and that's why we continue to see some of these. China remains our biggest concern in the market outside of, obviously, India in terms of COVID. So then when we talk about what things that China is trying to do to become a bit bigger player, increase exports, try to diversify away from the U.S. So according to Bloomberg, China is talking with Australia, Malaysia, and New Zealand about joining the Comprehensive and Progressive Agreement for Trans-Pacific Partnerships. Now, just remember the CPTPP took the place of the TPP, which the U.S. left in 2017. But given the relationships China has with both Australia, Malaysia, and New Zealand, I find it unlikely that this will go through. But they're trying to drum up some of the support, and just to understand, the current members have been clear that concessions for new parties are off the table, and China will have an uphill battle meeting requirements that limit state support for companies. So they support SOEs. Current members don't exactly like them. They're not going to give any kind of deals. So China's worried about being cut off from Western markets, which are a key source of technology and other critical economic inputs, which is why they care, which, again, not that it matters. And this is going to be one of those perpetual problems. All the while, bond downgrades for Chinese rating agencies have surged. So this is the number of corporate downgrades by domestic agencies by year because, again, we're continuing to see this pressure. There's more pressure coming into the Wong and the issues in terms of that fallout that continues. And again, we're getting downgrades not just on the private side, but also on the state-owned side, which is going to increase the cost of borrowing, which again is going to lead to those additional pressures. And then China's local bond defaults set to top 100 billion yuan for the fourth year. The problem is it's topping it in April. And this is so typically you don't get to that level. I mean, in 2019, it got there in about September. In 2020 and in 2018, it got there in a mixture between October and November, and we're already there in April. So you're going to continue to see this pressure because there's the PBOC is trying to manage how do you mitigate against, again, the risk of too big to fail. The fact, they want people to take haircuts. They want there to be some normalcy in the market, while not too much, because then it becomes an issue of confidence, which is why this is going to be an interesting chart to manage and to watch to see how much those delinquent debtors continue to become into play and what those bond defaults look like. So when you think about what is happening on the container side, this is why. So you have bond defaults, you have PPI going up, you have pressure locally in terms of consumption, and you have your export prices going up with PPI going higher. And again, just reiterating the freight index, which is going to put more pressure on where just how are you going to finance and how are you going to be competitive in the market, which is why, taking all of this and layering it with the slowdown or the reduction of money supply on an M1 and M2 level, you can just see the amount of stimulus that came into the market, and especially on an M2 level in 2020. Most of that has now been taken out of the market. And this, again, speaks to the pressure on credit impulses and that monetary policy trying to stimulate the economy. And this is where, when you start looking at China retail sales, the retail sales headline, but what is driving that? So a lot of it was gold and silver. So what are people trying to do? Is there a certain amount of value in gold? Is there a certain amount of inflation protection there? Then when you look at automobiles, obviously the shortages exist throughout the system. When we talk about missing the amount of supply, as assembly lines came down. Then you look at clothing, furniture, a lot of these things are large items that are seeing price increases in general. So I think you're going to start to see this slow down, especially as they go through the remainder of the year. So then when you look at China producer prices, input versus output, so producer prices, output, and input. So input prices continue to go up, but output prices still haven't gotten to that level. And it's important to look at that difference, because the difference, I think, is the biggest or the most important one on a percentage point level. When you look at differences between output and input prices, this is where we see the most pressure overall when we're looking at this divergence, because they're going to have to pass through additional price. But can the market on the export side and the local market on the consumer side really tolerate these types of push-throughs? And the short answer is they're not going to have any choice, because we've already seen compression on Chinese company revenues. So when we look at the China value added, this is just looking at those slowdowns again, but looking at this chart in a different way. So when we think about what is happening, so we're seeing some of these slowdowns, all the while the college graduates are actually going to increase. So according to recruiting site Zhaopin, there are 1.4 jobs available per college graduate. So it's not necessarily that there aren't enough jobs, it's that there aren't enough jobs in the right places. And here's a quote from Vice Premier Sun Junlan. College graduates should formulate appropriate ideas about employment, aim high, fuse personal goals with those of the party and country, make practical plans for their work and lives, go to the central and western regions and find work in areas where the country most needs workers. So they're trying to drive, think about the party and go to places that you need to, that need the support. And this is where you're starting to see that push for the rural drive, trying to get these individuals into those locations. But is there transportation? Is there housing? Is the job there sustainable? Is it fulfilling in the way of, what are your feelings versus, is it fulfilling in terms of what is my degree, and is that degree good there? And these are the different structures that we see when we start talking about these investments and what the consumer is going to look like, because there's additional pressure unemployment and just activity within the underlying market. Now, a quick side note as we turn to China dominating all steps of solar panel production, because when you look at the U.S. wanting to pivot more into solar, into green, this is, I think, an idea just highlighting just how much China controls of the underlying supply chain from all sides of the equation. With the U.S. being such a small part of it, this is going to become a bigger issue, because what if China puts tariffs on things? What if China starts to put pressure on it? And again, those are things that are going to be an overarching problem when we think about adoption of green, with the United States and China market share across clean tech industries. So when we think about batteries, cathodes, passenger EV sales, wind turbine manufacturing, you can see that China controls a huge percentage of this market, which again is going to make us beholden to China if, depending on how much we really try to go down this green rabbit hole of, what are we going to, how much are we going to rely on what China is, and are they going to input tariffs and increase price? And if they increase price, then that's going to decrease the adoption rate. And if it decreases the adoption rate, what does it mean? Or are we going to have to see new U.S. support go up? So the government, again, we're essentially funding China, which we know are doing terrible things on a human rights level, or at least, we expect them that they're doing these things like that. This is going to become a much bigger problem across the supply chain, across the green movement, if you will, in terms of how the U.S. can adopt. And then just speaking about import subject to tariffs. So U.S. imports from China under U.S. tariffs, China's imports from U.S. under Chinese tariffs. You get an idea on the percentage-wise, and then U.S. and China bilateral tariff rates and U.S. and China tariff rates on the rest of the world. So you can see, obviously, on U.S. exports. Now, U.S. tariffs on Chinese exports, you can see where they sit. U.S. tariffs on other exports. So clearly, we continue to hit them with tariffs. All the while, again, and Biden has said that right now he's not going to change that. He's going to leave that as is, which could create additional problems for China, which is already seeing pressure on their exports. The U.S. is trying to diversify supply chains, again, putting more pressure to it. All the while, they control the supply chain for green technology. And this is where, when we look at the Chinese credit impulses and how Shanghai equities typically follow, this is where we see additional pressure on the Shanghai, on Chinese, just activity and just equity valuation in general. So then when we look at on the growth rates, this is the policy tightening. So we keep talking about M1 narrowing, and that's pulling down the China onshore 12-month forward earnings. So when we look at earnings, then we'll take it a bit differently. Credit and fiscal impulses rolling over, and just what is that 12-month forward earnings? So you not only have a debt problem in terms of downgrades, in terms of pressure, you also have falling growth and falling revenue that is going to, again, weigh on, while you have rising prices, that's just going to weigh on your ability to not only get debt, but also try to see some sort of growth, which is when you look at strengthening renminbi will not help the profit outlook for Chinese exports, which again, the U.S. dollar has weakened. It's now back above 90, but still within this range that it's going to work within. This is going to put additional pressure on those levels of how much activity can we really see in the market. So this is a Chinese social credit system that we'll talk about this more on another time, just because we're running long and I don't want to keep it too long. But this is just showing a credit system that's going to be viewed by monitoring the way you carry out your daily life. So it's going to be a matter of, did you jaywalk? Did you get, and you don't even have to get caught by a person if the camera sees you do it. So there's a lot of ways that we're seeing this get implemented to create rewards and punishments that will impact your credit system and the credit you can get at a bank. If you fall lower, so you start at 1,000, and then the question, then the peak is 1,300, the minimum, the lowest is 600. But the only way to get to that top level is by doing things in terms of supporting the party, not speaking out negatively against the party, doing, and then obvious things, doing charity work, caring for your elders. But the more social construct of, not protesting, not speaking ill or questioning policies. That's where things get a little gray in terms of valuation and value of doing that. Now, when we turn to India, the biggest issue that we continue to see when we look at just activity in general and GDP throughput, here you can see just the inherent slowdown in activity. Now, it's not as precipitous as it was in the initial lockdown, but this is where we think that you're going to start to flatline here, and you're going to just go sideways as India works through its most recent surge and they try to increase the vaccine rollout. Now, when we look at India's poor, again, talking about the other side of growth, India's poor grew while middle class shrank. So when we look at the middle class and the low income declined by almost 30%, while when we look at the, millions, so we saw a decline of low income by about 37 million, middle income of about 30 million, while we saw almost 70 million go into being just straight up poor. And again, we continue to see this knockdown, which it's going to be difficult to see a strong consumer, a strong recovery when you have so many people sitting or struggling just in the underlying activity, especially when we're talking about India. And this is the pandemic sets back growth for India's middle class. This is something very similar in terms of pre-pandemic, post-pandemic of that low income. Just you were continuing to see this pressure where estimated number of people in each income tier in 2020 before and after the global recession. You can see that a lot more have fallen down to the poor level. And then when we shift over into Tokyo and into Japan, the Tokyo office vacancy rates continue to go higher. We continue to see pressure within the Japanese markets, which again is leading to some of these additional headwinds when we're talking about economic growth, economic activity, crude consumption, gasoline, diesel consumption. And when we look at the current conditions, a lot of these were missing estimates where Japanese Economic Watcher survey came in at 39.1, Watcher survey expectations 41.7. Price index, again, up and out, the price index continuing to go higher. So again, costs are going up, growth is starting to moderate. All the while, COVID continues to spread, vaccines remain slow, which is where we look here when you talk about new COVID cases, again, going back up in Japan, additional COVID deaths going up, while the lockdown index, again, ratcheting back up from 42.6 to 50. Vaccinations still remain very slow. And these are the issues that remain not just in China and India, but also in one of the largest, see China is the second largest, but the fourth largest economy in the world. So I know we covered a lot of the similar topics, but trying to kind of narrow it down and focus it a bit more on just growth, credit growth, COVID restrictions, and what does that mean going forward. So if you have any questions, please let us know. We appreciate your support as always. Again, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.